Hello, and welcome to our global viewers joining us from the UK and other parts of Europe, as well as those watching from the US and Latin America. A special warm welcome to our financial news, private equity news, and Dow Jones-wide audiences. My name is Mei Chang, and I'm a Senior Vice President at Dow Jones, overseeing the Barron's Group suite of publications, which includes financial news and private equity news in the UK, and Barron's and Market Watch based in the United States. Thank you for joining us for our third installment of a four-part series on the future of exchanges, exploring the changing roles of trading venues across the globe. This series is being brought to you by FN Custom Studios in partnership with SIX. Earlier this year, through our partnership with SIX, we had an insightful discussion in the series before looking at the future of exchanges in Europe. Then in September, we went on to examine Asia to see how some of the region's largest financial centers are pivoting to embrace a digital future. And then today, we turn our sights to one of the most dynamic regions of the world, Latin America, and one in which I am personally very eager to learn more about. So it's no secret that Latin America has been a healthy emerging market over the past couple of years, and it seems not even a global pandemic cannot get off its stride. Its stock markets have recovered strongly, and that has renewed interest in the region. It's clearly good news for a continent which boasts a broad and socially diverse population, where foreign direct investment continues to be a key driver for development, income, and employment growth. In doing some preliminary legwork in preparation for this discussion, I found one report citing that in the first 9 months of 2021, Latin American startups raised nearly $15 billion in new money, a jump of 174% compared to the same period last year. Latin America also recorded its strongest initial public offering activity of the past 6 years during the first half of 2021, with 55 IPOs taking place up to the end of August. Now, COVID-19 also created strong incentives for digital infrastructure investment in the region, especially in 5G, private networks, data centers, and fiber optic cables, as the focus shifts towards connecting the previously unconnected, especially in rural areas. But there's also room for caution, right? After an inevitable economic slowdown caused by pandemic-driven closures. And as with much of the rest of the world, inflation is another creeping concern in parts of Latin America, as is the strain on public finances as governments try to dig out of the pandemic. So how can Latin America retain its status as a hidden gem for overseas investment compared to other emerging market regions in Europe, Africa, and growth-oriented Asia? Well, undoubtedly, the answer will incorporate the region's young and growing populations, its underpenetrated sectors, such as in renewables, healthcare, and digitalization, and its vast natural resources. So here to dissect the opportunities in Latin America more and to highlight where the connections and synergies can be found for investors and entrepreneurs alike is a panel of highly regarded experts with deep insights and a broad range of experience. So let me introduce them to you now so I can stop talking. First, we have with us today Olga Cantillo, Chairwoman of the Ibero-American Federation of Stock Exchanges and Securities Markets, or FIAB, and she's also Executive Vice President and CEO of the Panamanian Exchange, which rebranded earlier this year as Latinx. Also here with us today is Javier Hernani, who is Head of Security Services at SIX Group and who is the Chief Executive Officer at BME, the Bolsa y Mercados Español. Please also welcome Juan Antonio Queterer, the Chief of Connectivity Markets and Finance at the Inter-American Development Bank, or IDB, based in Washington, D.C., a multilateral development bank. And last but certainly not least is Jose Luis de Mora, a Senior Executive Vice President at Banco Santander, CEO of Santander Consumer Finance, and Group Head of Strategy for Santander Group. And thank you, Jose Luis, Juan Antonio, Javier, and Olga for joining us today. We have so much to learn from you, so I'd like to just jump right into our conversation, that's okay. So I'd like to start out getting your take on the Latin America continent's future with capital markets. What form do you think it'll take, and why hasn't it benefit more from the global shift in capital allotted towards emerging markets? It seems to constantly be in the shadow of Asia. Maybe we'll start with you, Jose Luis. Jose, I think you are on mute. Sorry.
Thank you. Yes, for sure. Sorry about that. Well, first of all, As you mentioned at the beginning, Latin America has received a lot of foreign investments during 2021. So yeah, it's a little bit of the shadows of Asia because of the size of the region versus Asia, especially China related, etc. But it has received a lot. Also true that pure capital market investment has not been as big as Asia, but it has received a lot of foreign direct investment. So we don't have to forget that Latin America received a lot of foreign direct investments rather than pure capital markets. Okay, and then in the capital markets front specifically, I think the region has suffered for a couple of things. The first one is the pandemic, which has affected a bit more the Latin American economies, because a large part of the economy is in the formal economy, and then informal economy and pandemic doesn't work very well because people has to get out to the streets to get the money with pandemia or without pandemia anyway. No? And so that has caused a lot of requirements of social spending, etc. in the region, and that has caused also concerns about monetary stability, etc. Also, that's one. And then that has also triggered a little bit of political instability recently in many of the countries in Latin America. That has probably limited the amount of investments in the area. No? In Brazil, we have elections next year. In Mexico, there's a lot of talks about changing the energy reform that was done in the past. In Chile, is going through a constitutional change. There's elections have happened also in Peru and Colombia, etc., etc. My point on Latin America at the end of the day is that political stability is part of the life there, and despite of that, the region has a good trend towards stability, discipline, etc. in the medium term, and it's catching up with the rest of the world. So my view is that it has received a lot of direct investments, a lot of capital investments, a little bit of stability, but likely to be improving in the next few years.
Yeah. Thank you, Jose Luis. So you brought up so many great points, some of which we definitely want to unpack in the next 45 minutes to an hour. So we'll come back to that. But also, maybe Javier, you could also take a shot. I'd like to know what you think the continent's future is with capital markets.
Thank you, Maya. No, following Jose Luis' words, I think the region is really, I think, in a situation where the future looks, I think, brighter. It's obviously a cyclical world, as the rest of the world, in terms of better and worse moments. But in this situation, I think the numbers of GDP growth of this year and expected GDP growth for next year, I think, underline the fact that the region is in a clear recovery from the pandemic situation. I think one of the things that is missing in general terms is also Jose Luis mentioned it, is size. The market needs possibly to get more attention from investors all over the world. Size in terms of companies, markets, a little bit the region in general. I think is from a world level this kind of situation. And I think we really have to work on making the investment opportunities in Latin America better known all over the world. And this is something that at BME and now with 6 BME, we're trying hard to basically help the world to connect to Latin America in different forms. No? As you know, we have the LatiBex market, which is basically an idea to bring closer the Latin American investment opportunities to the European investors in euros. Also, we have an initiative called LED, with this Latin American exchange data, also to put together all reference data on all securities in Latin America. So it's more accessible, easier to reach, easier to analyze, and therefore overcome to some extent these more structural problems. So I think we really have to work on what is missing is possibly a better knowledge, a better analysis on individual investment opportunities also in the region. And it's a field of opportunity and a field where we have to work.
I like your point about size. Let me come back to that. But first, I'd like to invite our viewers to please write in with your questions in the Q&A box at the bottom of your screen. I'll try to incorporate it along the way during our discussion, but I'll also be sure to take some of the questions at the end. I'll leave time for that as well. Going back to your point about size, Javier, Mexico and Brazil are the two largest markets in Latin America. They are probably the most well-known around the world. Juan Antonio, in your point of view, how are Mexico and Brazil similar and how are they different? I mean, in my mind, for example, Mexico's economy is really heavily linked to the US, and I'm not sure that Brazil's is, but I'm sure there's other differences and similarities. Juan Antonio, would you want to take that?
Yeah, thank you very much. Thanks for the introduction. Yes, indeed. I mean, there are similarities, but there are also important differences. If you look at the composition of the sort of overall Latin American markets in a sort of aggregate way, you can say that 50% is Brazil in market cap, right? 25% is Mexico, and 25% is the countries around the so-called Pacific Alliance ex-Mexico. So that is Colombia, Peru, and Chile. That kind of gives you the overall picture of the situation. Now, remember that Mexico is also a member of the Pacific Alliance, and that will bring us 50% Brazil and 50% the rest. You have to include also countries which Central America, the Caribbean, some other countries which are not there. But I am making like a very sort of a sketchy draw of the situation. So given this, and also you have to think that Brazil GDP is 1.5 times the GDP of Mexico. So it's like, in overall terms, you can see that one could say that Brazil is a more developed capital markets. It is true that Mexico has connections with the Chicago Mercantile Exchange, important connections there. And it is also true that in Mexico, there was a split of the stock exchanges very recently, which in the past they had only one, and now they have two. So that is the situation in both countries. But I wouldn't really be able to tell you that there is one country which is better than the other or dominant to the other. I would think that in certain things, certain dimensions, Brazil is doing better, but in other dimensions, Mexico can do better as well. Okay? Mm-hmm. So I will just leave it here for a moment. Thanks.
Okay. Olga, I'm curious to get your take about the impact of these sizable markets in Mexico and Brazil, in particular, as was highlighted. What kind of impact do they have on the rest of the region? Are they good influence? Does it matter?
Hi, and thank you for the introduction as well. I would say that yes, of course, they have a positive and a big influence in the rest of the region. It's, as you have mentioned, and Juan Antonio as well, they're the two largest in the region in size and market depth. And by one hand, you have Mexico, as Juan Antonio mentioned, with two different exchanges that splits the market, but at the same time, it's maybe a positive thing, and it's also linked to NAFTA. So it's therefore more oriented towards the US rather than the LATAM region when compared to Brazil. Its influence in the region is mainly through the participation that it has in MILA, as mentioned, between Chile, Colombia, Peru, and where Mexico is also part of, and also contributing with the rest of the peers with their experience and knowledge, as well as does Brazil the same with the rest of the peers in the region, with the innovation they have, sustainable finance, the different products, and so forth. Now, as for Brazil, instead of having a split market, it has consolidated its market into one integrated one, and it's linked to Mercosur. So it's therefore oriented to our LATAM region, and therefore with a bigger presence or influence that Mexico may have. B3 is also, and this is very important, has a minority shareholder of several stock exchanges in the region, out of which Colombia, Chile, and Peru are in the workings at this moment of integrating under one holding company. And therefore, B3 has been playing a key role in this process. I would say that they bring to our table the same as far as sustainable finance, technology, very important innovation products, as well as their expertise as the largest FMI in the region. So yes, I would agree on your comment.
Yeah. Jose Luis, what do you think are some of the major learnings that we've seen from Brazil and Mexico, either missteps or positive impact that other countries in the region can take away?
Okay, well, you have different things in different markets, okay, as Juan Antonio mentioned at the beginning. So, for instance, Brazil has developed, for instance, a good regulation around multi-mercados. Brazil has a good market around interest rates and derivatives, and it's clear locally. On the other hand, Mexico can also teach the rest of the market how to manage the public debt market, because traditionally Mexico as a country, beyond governments, have had a good discipline, a good fiscal discipline, and therefore has attracted a good pool of investors into the long end of the curve, up to 30 years. But I would say that the biggest lesson for all of them really comes from one thinking, which is you are going to have a great capital markets if you have a big pool of local savings. And as Juan also said at the beginning, the biggest country is Brazil. Brazil is the house of the biggest saving pool in the region. And whenever you have a big saving pool, that attracts more than your fair share of capital markets. So the biggest pools of savings today are in Europe, US, and China, and they tend to pool to attract all IPOs. No? So what I think one big lesson for everyone is even at lower level, try to increase the level of local savings reinvested locally. Chile has done that with Afores. Mexico also has that with Afores. So that's such a good development for the capital markets and to develop the local corporates, etc.
Yeah, and we've seen that grown in the countries that you mentioned during this pandemic as well, leaving them in a really good spot to bounce back. I want to turn to you, Javier. What do you think, and take a step back a little bit, what do you think is the major difference between LATAM exchanges and their peers in Europe and North America? And as a bank or investor or entrepreneur, how should we approach them differently than those in Europe and North America?
Right, I can tell you the Spanish experience, which I think is to some extent always a mirror, no, to look into in the development of all this region. I think the biggest push for the Spanish exchange and the liquidity and the importance of their stocks in the world has a lot to do with several reasons. One is the lack of a hard currency. I think the fact that Spain joined the euro was an extremely important factor in the development of the market for obvious currency risk issues. We are old enough to have lived through the peseta in the equity capital markets, and it was completely different story in terms of solidity of the market and attention from foreign investors. I think that is a point that really makes a difference with countries where the currency is not as stable, obviously, as the dollar or as the euro. I think that is a very important element of progress going forward. That's one. Another thing that we suffer, but we benefit, is Brussels. No? Is the fact that we have one regulator, let's say. Obviously, we have the national regulators, but the bulk of the legislation comes from one source, and it takes a long time. There's a big battle always, but the fact that we have the same regulatory framework in all the European Union, I think it makes things extremely easier for the harmonization of the market, obviously, and also for investors to know that in all these markets, they have the same currency and the same regulatory bodies and accountable to the same rules everywhere. So and it's a no-brainer for an investor to buy a stock in France, Italy, Spain. They know it's the same. They just obviously focus on the fundamentals of the companies, not on everything else, because everything else is taken for granted. And I can tell you that Olga, as the chairwoman of the Federation of Latin American Exchanges, which is doing a great job, we're working very, very hard into trying to see how do we help from this federation into the domain of regulation and harmonizing and putting that together. I think those two elements, I think, are the big differences between the markets, because I have to say that in everything else, which is technology, the development of different solutions, etc., the Latin American FMIs are really good. I think they are really on top of everything. They're doing a great job. The big markets and the smaller markets, everybody is really very much in the business and knowing exactly what to do. The thing is that we need to create a better environment for those markets to develop accordingly. That's my point of view.
Yeah, and you mentioned Olga's hat with FIAB. Olga, I'm wondering how would you counsel investors and entrepreneurs to approach investing and interacting with the Latin American exchanges?
I'm sorry, can you repeat that question again? I didn't hear that properly.
Oh, sure. No, I was just wondering, with your hat, with FIAB, leading the FIAB, how would you counsel investors and entrepreneurs to approach these Latin American exchanges when they're so accustomed to the exchanges that they've interacted with in Europe, with the harmonization and the ones in the US?
Okay, yes, I would go back to what Javier just said. I think he could not say it better, the difference between our markets. And when comparing our markets to the US markets or the European markets, it could be an unfair comparison because we're totally different. The constraints that we have, mentioned by Javier, but then on the opposite side, the other things that we have. And I would advise the investors to have an approach on an individual market basis rather than as a whole, because of the same reasons that Javier was mentioning. And by doing so, they can assess the risk that they're willing to take in because of the political dependency or volatility that Jose Luis was also mentioning from within our region. And that, I think, would be the approach to take. We have many benefits in different countries and markets, and all of the same, but at the same time, very different. And one of the main things to do is not compare one market to the other. We may have a market that it's mostly government securities, and then you have another market that has equity and fixed income in their exchanges, and some may have FX, derivatives, commodities. So it's just dependent on what your interest and investment may be, and that would be my advice in that sense.
Great, thank you. I'm going to switch gears just a little bit. Juan Antonio, what do you think is the role of technology for the development and global connection of these financial and capital markets in Latin America when they don't have an overall Uber governing body to unite them? Oh, Juan Antonio, you might also be on mute. If I could just, yep, thank you.
Talking about technology. Technology to me is not the most important thing, but it's the only thing that matters today, as they say in football here. The technology is the main driver, and it will become the most definite argument in terms of competition between across markets. In the past, project design, instrument design, product design was based on cash flows, tax arbitrage, regulatory arbitrage. Nowadays, most of this is gone. What matters is technology. So in this respect, I have to say something which is to us very important. When I say to us, it's to the bank, to the Inter-American Development Bank, when we try to help the region to develop capital markets. And that is that we believe that certain radical changes in technological approach to the market design has to has to be made. And in the past, these changes in design couldn't be done, couldn't be implemented because of the lack of the appropriate technology. However, now we already have this technology, maybe not 100% proven, but pretty much there. So I think that the next step, the next big step for the development of the regional markets in Latin America is going to be a radical change in the technological infrastructure that these capital markets are using. And we're seeing something like that already happening in a market, which I guess we may talk a little bit more later, but that is the green bond market, which is kind of getting a dynamics on its own, and eventually we think that it'll become or can be a candidate to become the disruption point in all these markets in the region, and of course in other regions as well. Okay, so I'll leave it here.
Okay, well, thank you, Javier. I saw you nodding along a little bit as Juan Antonio was speaking. How far behind is that technology in the Latin American region to unite these financial and capital markets? And can you talk a little bit about efforts being made to address that on the technology front, if you know?
Well, to my knowledge, and as I said before, I think the investment in technology in the region is really important. I think really exchanges in the different markets are really up to international standards in terms of trading platforms, clearing platforms, settlement platforms. This is really the case. We have also provided some technology to some of the markets, but in general terms, I would say that the IT standards are really high. What maybe Juan Antonio is referring to also is to the digital revolution that is coming. No? The fact that the systems we have today, that I refrain from calling them legacy, because it is like if they were old and not working, and it's exactly the opposite. This is what is happening. I mean, they are supporting today's businesses everywhere. But probably the new frontier, obviously, is the digitalization of markets and how this will impact the region and the access to markets. And only a word on this. We conducted a panel on fintechs in the last Latibex forum that we organized, and I was really impressed by the level of innovation and new ideas, new companies coming, thinking about different developments that are coming from the region. I think it's a great opportunity coming forward, and honestly, I think it's one of the possibilities that will help also develop the market, because I'm an equity guy to a large extent. I truly believe that when you have a developed market, you also need as a pillar, you need a highly developed equity market, not only fixed income and the rest. I think equity is super important in terms of culture, in terms of helping retail investors also to be next to the market, use their savings into investing directly in the market. These kind of things are very much equity oriented. No? And I think that the IT revolution and the new ideas, the new fintechs are going to help also in the direction of new listings and new possible new investment ideas.
Yeah, and I think the pandemic really spurred the innovation in this area, in the fintech development area in Latin America. Jose Luis, do you see it also as a sector prime for investment and great returns?
Yes, definitely. I mean, it's not that I foresee, it's that we are. It's a fact. It's a reality already. I think here you have 2 or 3 reasons why Latin America, that's a good segment of the market. The first one is that Latin America, the interest rates tend to be higher. And with higher interest rates, fintechs can make more money. I mean, in a situation of low interest rate like US or negative like in Europe, the life of fintechs is a bit more difficult. So that's a good thing. And then secondly, the margins of financial products, etc., because it's not mature markets, tend to be wider. So a disruptor tend to have a better environment. And we've seen that, no? We've seen that Mercado Libre, came out from Argentina, now listed in NASDAQ, and in New York. You also have Nubank, basically, has came to the market last week, I think. That's an online Brazilian bank that has extended to the region. You also have payment companies, also in Brazil, Stone, Pagonex. So you have a few of those. It's interesting to see how a lot of the fintechs, not all of them, but a lot of the fintechs have two things. First of all, they come out of Brazil. And the main reason is that Brazil is a big market. And therefore, a big market and size tend to attract innovation, preferably. And the second thing is that some of these fintech also tend to list in the United States, because the US markets tend to pay well or higher than other markets for growth and for fintechs and for tech. And therefore, a lot of that is attracted there, no? And I would say Brazil is probably the only market that today is competing in that fintech world with the US.
Maybe we can flip the playbook back to something more standard. Latin America has long been a market reliant on commodities, right? So what role do you think commodities will continue to play in terms of attracting outside investments, Jose Luis?
Well, I think commodities has been a traditional sector in Latin America. And a lot of the capital markets in Latin America have been linked to commodities and have come up and down following the commodity cycle. The commodity cycle, if you remember, was very strong up to the financial crisis, 2008. It has been basically doing nothing up until the last 2 years, in which basically have recovered. Looking forward, I would say that the commodity sector is very exciting. And that will basically go into Latin America for 2 or 3 reasons. The first one, a lot of the metal minerals are key for the development of the electrification of the auto, etc., and energy sector. And that's how Latin America has a lot of that. Lithium, for instance, is one example. Copper, is one of the core commodities. And the second, the agro commodities, which are key to feed the planet at the end of the day. So those two, there's going to be a lot of capital market action around that. Yeah.
What about you, Juan Antonio? What is your take on commodities and its importance in the region in attracting future investments?
Well, commodities, again, but just Jose Luis mentioned, is clear. Fortunately for the region, we are endowed with all these sources of commodities which are going to be key for the net zero transition. That's what everybody is looking at this point, right? But beyond that, I think that also there is a need to do a lot of work on agriculture and also in the intermediate steps like meat growing, because those are also great sources of methane in this case, which contribute to the gas effect for the earth. So in both directions, I think that if you look from the point of view of the transition towards net zero, Latin America has a great opportunity, both offering their basic metals that are needed for that, but also taking care of the value chain of the soy, pig, meat, table, which is something that creates also a large part of the gases. Okay, that is, I think, that double view on that situation from the perspective of the net zero transition.
Javier, I think it was you who before brought up fixed income, and I don't want to forget about that because it's a large part of the region's market. How do you think fixed income fits into the region's financial future?
I think fixed income will probably continue to lead the way, in terms of capital allocation and the securities that will be used to channel investment into the different investment opportunities. I think it's obviously is going to remain a very big market, and as Olga very well mentioned, I think it's sometimes very difficult and sometimes very unfair not to do a regional view, because every market has its own developments, its own expertise, and also focus into different things. I think a fixed income again, will continue to play a major role in many of the markets. But again, let me say again that I miss more participation of equity. I think there's a lot of wealth creation around listed companies becoming bigger, and in terms of job creation, in terms of innovation capabilities, has a lot to do with the presence of companies in the exchange, asking for capital, asking for growth, and going forward, and taking again equity and fixed income as their sources of finance. But I think we need a bigger equity markets and deeper equity markets, also in Spain. But I think it's a major source of development going forward for the whole capital market ecosystem. So fixed income will continue, in my opinion, to lead the way in many aspects. Juan Antonio mentioned the green bonds. I think is another big opportunity for the region to capture finance into projects that are green or ESG, which I think will be all over the world. But the region will probably capture important funds going directly to projects that will benefit a lot the ecosystem in general, the capital market ecosystem, but the real ecosystem in the sense.
Yeah, I want to, since Javier brought up the green bond market, Juan Antonio, I know that's a big part of your expertise as well. I wonder if you could talk a little bit more about the green bond market, and even as how it ties into the infrastructure building in the region.
It was me? Sorry.
Yes,
no,
yes.
Luis.
Yes.
Okay, sorry, I didn't get. No, for us, the green bond market is, as I said, very important because many different dimensions of it. One is because of its essence, which is the financing of the major endeavor that human race has in front of himself, which is the net zero transition. So that's the core of the story. But besides that, it has several other by products or by implications. One of these is that, for example, Latin America has 7% of its green bond markets versus GDP, and it could have up to 12%. So we have a huge opportunity to grow without doing anything in particular, other than understand why it is that we're not already at the 12%. And we have identified, I think, one of the reasons, and that is because of the lack of transparency that the region is attributed to. It doesn't mean that there is no transparency. It's more of a question of perception from the point of view of the investors. So we did develop a platform that we call Green Bond Transparency Platform, which lists all the issues on the green bond space in the region, and that is something which is having a great and important effect. It's been launched since April, and it already has a market share of 70% of the issues are already in the platform. So we expect pretty soon to have 100%. But the point is not so much to make a pitch about the importance of the platform, but more than this is like the germ of what I was talking before, the germ of something that will be able to create an application of the new technology, of the technology which is based on the distributed ledger technology and the tokenization of the issues. So that's our next step on this part. But basically, I think that with the organic potential of growth that the region has, plus this sort of technological advantage that we're going to put it there, I think that we have a very good chance to become leaders on this segment of the market in the near future.
And Jose Luis, I'm also interested in getting your take on this. There's a real great momentum globally to invest in sustainable companies and sustainable sectors and areas. What is the opportunity there in Latin America for those interested in making those green investments?
Well, it's a lot, but just to highlight one. For instance, and I tell you around Santander because I know that a bit better, but there's a great opportunity in Brazil about trading carbon emissions carbon credits, okay? So the region is a great, have excess carbon credits. So at the end of the day, a lot of the world will be buying carbon credits from Latin America, and trading those carbon credits is a good business. So you could make a business around that. The agribusiness in Latin America, the fact that in Latin America there's more green nature, etc., that creates carbon credits, is a great opportunity for investors. Beyond that, green investment is an industry around the world. But in Latin America specifically, if you want to generate energy through green sources, you have thousands of opportunities. I don't remember very well the statistics, but for instance, in Brazil, I thought it was something like it's 3% of the population in the planet and 15 or 20% of the hydro resources. Like, well, suddenly you can generate a lot of green energy through hydro. Wind, you can do a lot of that. Solar, so, yeah. It's full opportunity. The world is full opportunity, but Latin America has a higher share relative to the GDP and the population. So that's, for instance, carbon credits is Brazil. It's going to be a global leader. Yeah.
If I may add to that,
Please,
I would like to say that there are many of our markets who also have high standards and principles in place. Some of them are members of the Sustainable Stock Exchanges of the United Nations, some members of the Climate Bonds Initiatives as well. Other markets besides Brazil working or in progress of working to have carbon credit traded in their exchanges. And it's not only about green, it's ESG in general. We also have huge potential on social securities due to the impacts of the pandemic and the inequalities that we have in some of our countries, as well as sustainable securities. So I think in general, in Latin America, there's a huge opportunity. There's high demand from international investors. And in that sense, having that standard within our markets, it's very important. And that's something that in FIAB, we are looking to have within our market members. Thank you.
Yes, no, that's great. And also ties into something I was thinking about. I wanted to go back to an earlier thread, Olga, that we were talking about the differences between the Latin American exchanges and in the ones in Europe. And one of the differences is the regulatory convergence. And I'm wondering if there's any likelihood of a regulatory convergence across the Latin American region, or do you think the markets will continue to be somewhat siloed moving forward? Do they look at Europe and say, well, we'd like to replicate that, or what are the markets thinking here?
Well, I think it goes back to what Javier was mentioning before, but despite of that, yes, I do believe that we have the regulatory convergences across our region, especially nowadays, as I was just mentioning, on the ESG side, where you have the trend to standardize the different principles. It's the same for those, and also as far as technology, fintech in some cases. And I do believe that the markets will keep, as you said, their own particularities of the regulation, because I don't know if it's a silo thing as it is, but it's like bringing down international standards and best practices to our countries and apply them to our markets, because again, we're so different. If we are looking to have something like the European Union, I don't think we are at this moment. It may be something positive to have, but I think that what we have could be improved, but it's so far working. That would be my take. I think that the integration that I mentioned earlier under a holding company of Colombia, Chile, and Peru may be the first steps into having that as the European countries.
Do you have any visibility how that's going? With the early...
Well, they just recently announced that it has been approved by their shareholders, and it needs to get approval from the regulators at this moment.
Okay, great. For our audience watching this terrific conversation, I'd once again like to encourage you all to chat in your questions in the Q&A box at the bottom of your screen if you have any for our panelists. Jose Luis, very early on in our discussion, you brought this point up, and I do want to come back to it, which is the point about the region's history of political instability. What do you say to investors concerned about this, and how can they invest smartly in spite of this?
Well, first of all, I think, Latin American markets are branded with a little bit unfair or exaggerated political instability, but that's the reality. That's branded that way. So a couple of things here, and therefore there's a little bit of volatility. So what a lot of smart investors do is whenever there's a supposed crisis or political crisis, people pile up, and then whenever it recovers, they sell whatever. So that's a little bit of that cycle. Now, when you have been in Latin America for a long time, like Banco Santander have been, and you have been as a principal investor because we've been buying banks over there, you realize that, there's a little bit of political instability, but too exaggerated. You have to learn to live with that. That creates opportunities because volatility is opportunity. One thing that, with a small exception that we don't know where they are, things are never broken completely or are never broken down, and things get a little bit under stress and they recover, etc. If you see the achievements of the region over the last 15, 20 years, not to talk about, we basically have democracies across the region to start with. We all have independent central banks across the region. A lot of the countries have succeeded in having a loan yield curve for the sovereign bonds, which is very important. Without that, you cannot progress. And they have done that by managing inflation, being more or less fiscal discipline, etc., etc. So that attract foreign savings and local savings. Local savings have been incentivized with Afores and pension funds in many places. So that has been extraordinary if you look back 20 years. Sometimes you go up a little bit down, etc., and sometimes political situations are a bit stable like now, but things recover and the region is going up. And against that, you have the demography, which is super good compared with other parts of the world. You have a catch-up in productivity that is happening across the region. So we continue to believe in the catch-up story of emerging markets in general, and Latin America in particular. So I think you have to have a long-term view. You have to take advantage of short-term volatility. And, as usual, you don't need to believe that short-term political instability is going to be the end of the world. It's a buying opportunity. Actually, that's the way we say it. But anyway.
Great. Juan Antonio, speaking about long-term view, what do you think some of the region's greatest assets are, and how's that going to impact the growth of the Latin American market?
Well, I think that obviously the most important assets that the region has got at this point, one could say, is the natural resources, the general endowment of natural resources, the youth relatively compared to other countries, other population, the growth potential of that population, and also the opportunities that the region has to grow in many different areas. In the region, there is a huge lack of investment in infrastructure, for example. So we're talking like 300 billion a year, an important, a sizable amount, and not counting, not including in this everything that has to do with connectivity infrastructure. Okay, so if you put all this together, it's got about, you know, the empty glass view or the half glass view, which is that all this new infrastructure can become sustainable infrastructure, can become green infrastructure. All this deployment of broadband can become the basis for a new economy based on 5G and a smarter use of the spectrum, and to make the work of the economy much more based on the new digital technologies that we have at this point. And that is an example, for example, the Nubank that we were talking before, that's something that happened here. Unfortunately, it's been listed in New York. That also you have to take into account, right? But the business itself, it's been conceived here. There's a huge amount of people which have no access to financial services, and that, you know, gap, to close that gap requires an intensive use of new technologies. So in a sense, in the near future, Latin America can become at the forefront of the net zero transition, and also of the implementation of the digital connectivity infrastructures to base digital economies in a big way. Okay, that'd be my assessment of the situation. Very optimistic.
Great. So we have an audience question. This viewer is asking, what are exchanges in Latin America doing to diversify their sources of revenues in the near to long-term future? Javier, do you want to take a shot at that?
Let me readdress this question to the expert here, who is Olga, who is CEO of the Panama Exchange. I think I have my views, but she's running a business there, so I think is much better equipped.
Yes, thank you. I would say that many of our markets are integrated with their CSDs, and CSDs have more opportunities to diversify their revenues as far as different services that they could provide. However, on the exchange side, it is very important to be following and being part of the fintech ecosystem. We cannot be just observers of what's happening. And I believe that that and also data vendors, as far as data vendors, also very important for us. And I would say that anything ESG related, we're talking about the trading of carbon credit and exchanges. It's also something that needs to be in the lookout. The crypto exchanges, it's something that we also need to see. There are some exchanges that are now trading crypto as well, and we just need to know what's out there, what's happening in the world to bring it to our markets, and then being able to diversify our revenues. But that I would say, I don't know, Javier, if I missed anything or left anything out, or Juan.
No, I was going to say that in line also with what Juan Antonio said, I think there's a big opportunity for all of us, not only for Latin America, but for exchanges all over the world, and everything that is tokenized assets. I really believe that there are many assets in the world that are not accessible for investors because of the nature. Talk about natural resources, real estate, rights, art, so many different things that can be potentially tokenized, which obviously needs, first of all, a custody that is totally reliable, same as with securities and with fixed income. We just forgot about this, no? But securities used to be custodized also in paper, no? And with risks of, with operational risk associated. Now we don't, because everything is a book entry, and we feel totally secure. But this is something that we could try to translate also to other assets that now are accessible only by big fortunes, people who have wealthy people who can address big investments into asset classes that today are not, let's say, popularized. And I think the tokenization of different assets is one of the things that we have to be engaged in. I really believe we need to do this on a regulatory world where everything is safe and secure and not into experiments. I always say Spanish thing, which is experiments with lemonade, not with Moet Chandon. So we need to really make to know that we are capturing the savings of people. So we need to address it with all the security we've done with the rest of the assets. And I think, again, if we're able to translate this good expertise into new asset classes, I think we will help a lot the diversification of investment into out of cycle or out of the interest rate cycle risk in this moment, for example. And exchanges are bound to be big actors into this, let's say, revolution of the new asset classes through technology, tokenization, and the application of a safe legal environment. I think that is one of the big sources of the future.
You might have already answered this, Javier, but I recognize we're running out of time quickly. So I thought maybe I would just ask all our panelists to answer one last question, the same question. This being the end of the calendar year, what are your predictions for the Latin American market in 2022? If you could just highlight one big winner from either an economy or a sector where we'll see a rise in investments, what would that one thing be? I'll start with you, Jose Luis.
One. Should I know I don't be here, I will be trading, but on my own account. But anyway, making a prediction for the next 12 months is generally difficult, but the trend here around the world is for rates going up. Rates going up for emerging markets tend to be not the best thing in the world. So that might bring instability because a lot of the hard currency going into emerging markets, specifically Latin America, looking for yield might be repatriating. If, for instance, rates in the US go to 2% or they're launching, etc. Okay, so that's for the short term an indication of some volatility. That's also elections in Brazil, for instance, which will probably also bring a little bit volatility. Having said that, I would expect volatility first half of the year, second half of the year, an improvement of the markets. Probably once the interest rate hikes has been settled and the market is being clear. And I see quite a lot of strength in the commodity sector through the region. So,
a lot of tips there. What about you, Olga? What would be one big prediction from you for 2022?
I agree completely with Jose Luis, and I would say that a high in commodity prices due to external conditions, and on the downside or the cautious side, I should say, the presidential elections that are happening at this moment, as well as for 2022, will also bring some type of volatility. But as mentioned before by one of our panelists, it may also be an opportunity. So it's just being on the lookout for that.
Great. Juan Antonio, your turn.
Yeah, I am going to repeat myself, but to me, the thing that's going to happen in Latin America this year is going to be an explosive growth of the green bond markets. There are many issues which are already there. So most likely we'll see that, and we'll see a materialization big time of the green premium in this market, which will become like the beacon for other markets to move towards.
Great.
That's my prediction.
Thank you. And Javier?
Nothing to add, really. I mean, I mentioned before that the fintech world, I think, is going to give interesting opportunities. There's a lot of creative and innovative people in the region that will prove themselves to be, I think, good entrepreneurs this year. And if I may, let me just say one thing on political instability. I think, they say that they asked Churchill, how do you feel? No? And he said, compared to who, no? Honestly, I mean, if we are here trying to give lessons of political stability to LATAM coming from Europe, Brexit, do I have to mention, or the US, I think is a kind of the never-ending old story, no? That LATAM has political instability. True. What about Europe? No. What about the US? I mean, unfortunately, the world is into a fairly unstable political situation. So I think we, as Jose Luis mentioned, we have to live through that and take account of the opportunities, knowing that we are all in a very volatile world in almost any region of the world, in my opinion.
Thank you all so much. On that note, we'll have to wrap up this discussion. We've heard some great insights and had some great tips. I wish I could keep all our panelists here sharing their insights because there's still so much to delve into, but I really want to be respectful of their time as well as that of our audience. I think we can agree that Latin America is an exciting region with ample opportunities for investors and entrepreneurs alike. Like other emerging markets, we just have to go in with a deep understanding of the nuances in the region and the individual markets there. A big thank you to Olga, to Javier, to Juan Antonio, and Jose Luis for taking the time to detail all these intricacies of investing in Latin America. I'm sure you will all agree with me that it is equal parts illuminating and exciting. I want to thank Six for its partnership with FN Custom Studios, making it possible for us to bring this dynamic series of conversations to our audiences worldwide. And I look forward to the new year when we will bring the last in the series of 4 discussions on the future of exchanges. I hope you will all be able to join us for that finale as well. But for now, I wish you all a safe and enjoyable season and a wonderful new year to come.